As a young man, Tim was excited to invest in real estate and has enjoyed building and growing this profitable business. However, Tim isn't quite as young anymore, and he's getting tired of dealing with tenants, toilets, trash, taxes, termites, and turnover, not to mention deferred maintenance. The cash flow on his properties is poor relative to the equity and time he has to invest in their upkeep. The depreciation credits have also been exhausted, so most of the income is now taxable. With most of his investment dollars tied up in properties, Tim is most concerned that a health issue or other unforeseen circumstance could force him to sell when the market is not as favorable as it is now. Tim has a lot of reasons to sell, but if he does, Uncle Sam will take a significant portion of his equity. Purchasing replacement property can lead to the age-old dilemma of buying someone else's problems, and banks often won't work with someone who's retired. At least his kids will get a step up in basis when they inherit his properties, Tim thought, so he was resigned to stick it out despite the headaches and low performance of his business. This, however, doesn't have to be the case. Rather than accept his situation, Tim reached out to the helpful people at defertax.com. After listening to his needs, they introduced him to the Delaware Statutory Trust, the result of Revenue Ruling 2004-86. In general, the Delaware Statutory Trust is established by a real estate firm or sponsor as a special purpose entity that is capable of buying large pieces of real estate with cash or cash-in financing. Once established, the structure enables the sponsor to sell off fractional ownership interests. The real estate purchased by the trust can be any type of commercial property, and their tenants are often large familiar companies that frequently have corporate guarantees of the leases. The Delaware Statutory Trust even qualifies for 1031 exchange treatment, so his equity can move to the new investment without paying taxes, provided the guidelines of the 1031 exchange are followed. The Delaware Statutory Trust certainly isn't right for everybody, and there are risks involved. As with any other investment, you should review these risks. For Tim, it was the right call though, as it enabled him to overcome the limitations keeping him from living out his retirement dream. There are many ways to apply this tax strategy, either individually or in combination with others.
Hi, I'm Michael Wallace. I'm CEO and founder of Wallace Investments. We specialize in implementation of tax strategies to save money on your taxes every year. Probably have more tax strategies than anyone else. We have a specialized program where we can actually prepare your tax return and implement our specialized tax strategies free of charge. If you're interested, see my contact information. Thank you.